Hey everyone, what's going on? It's Delta Edge, and welcome back to the channel. Listen, when it comes to building long-term wealth, I'm sure you've heard it a million times. But investing in mutual funds is absolutely crucial, especially in a year like 2024. But, and this is a big but, are you picking the right ones? See, most people just throw their money into whatever sounds good, or whatever their financial advisor, who probably makes a commission off them, recommends. Not you though. You're here because you're ready to take control of your finances and really understand where your money is going. That's why in this video, we're diving deep into the top 5 mutual funds that you should be looking at in 2024. And just as a bonus for sticking with me until the very end, I'm going to tell you how you can get your hands on a special reward worth Rs 21,000 because hey, who doesn't love free money? Let's do this. Alright, kicking off our list at number 1, we have the Mirae Asset Emerging Blue Chip Fund. Now before I get into any specific numbers, let me just say this. This fund has consistently outperformed the market. And I'm talking year after year, beating the benchmark like it's nothing. Over the past 3 years, this fund has given investors an average return of, get this, 25%. That's insane. And it's not just a fluke, because if you look back even further, the 5-year returns are hovering around 22%. This is the kind of consistent growth that can really make a difference in your portfolio. But hold on a second. What's even more impressive is that this fund has managed to achieve these returns while keeping its expense ratio incredibly low. We're talking 0.67%, which is significantly lower than many of its competitors. And that means more money in your pocket, guys. Now, what about the assets under management? Well, as of right now, the Mirae Asset Emerging Blue Chip Fund has roughly Rs 40,000 crores under its belt. That's a sizable chunk of change, and it shows that investors are confident in this fund's ability to deliver. So what's the catch? Well, like any investment, there's always some level of risk involved. But what I like about this fund is that it focuses on large cap and mid cap companies, which tend to be more stable and less volatile than smaller companies. Plus, when you look at their portfolio holdings, you'll see some really solid names in there. Companies like HDFC Bank, Reliance Industries, and Infosys. These are all blue chip companies with a proven track record of success. So, if you're looking for a fund that has the potential to generate some serious returns while still managing risk effectively, the Mirae Asset Emerging Blue Chip Fund is definitely one to consider. Alright, moving on to number 2 on our list, we have the ICICI Prudential Technology Fund. Now, if you've been following my channel for a while, you know I'm a big believer in the tech sector. And for good reason. Technology is the future, guys. It's what's driving innovation and growth in the global economy. And this fund gives you direct exposure to some of the biggest and most innovative tech companies in India. Over the past 3 years, the ICICI Prudential Technology Fund has generated an average return of 30%. That's right, 30%. And if you look back even further, the 5-year returns are even more impressive, coming in at around 35%. This fund has absolutely crushed the market. Now let's talk about risk. Yes, investing in technology can be risky. The tech sector is known for its volatility. But here's the thing. This fund invests in a diversified portfolio of tech companies, which helps to mitigate some of that risk. And when you look at their portfolio holdings, you'll see some familiar names like Infosys, TCS, and HCL Technologies. These are all established tech giants with a proven track record of success. But you'll also find some up-and-coming players in there, which gives the fund some growth potential. The expense ratio for this fund is a little higher than the previous one, coming in at 0.95%. But honestly, with the kind of returns this fund has been generating, I'm not too worried about that. They also have around Rs 25,000 crores in assets under management, proving investors are confident in them. So, if you're looking for a way to capitalize on the growth of the tech sector in India, the ICICI Prudential Technology Fund is definitely worth checking out. Alright, coming in at number 3 on our list, we have the Access Growth Opportunities Fund. Now, this fund might not be as well known as some of the others on this list, but trust me, it's a hidden gem. The Axis Growth Opportunities Fund focuses on investing in companies that have the potential for high growth, and they've done a pretty darn good job of picking winners. Over the past 3 years, this fund has generated an average return of 22%, outperforming many of its peers. Now, I know what you're thinking. Graham, a 22% return is good, but it's not as high as the other funds you've mentioned. And you're right. But here's the thing. This fund has achieved these returns while maintaining a relatively low-risk profile. You see, the Axis Growth Opportunities Fund invests in a diversified portfolio of companies across different sectors. This diversification helps to reduce risk and volatility. And it's one of the reasons why this fund has consistently outperformed its benchmark over the long term. The expense ratio for this fund is a respectable 0.82%, which is in line with other funds in its category. And they have a solid amount of assets under management, with around 18,000 crores currently invested in the fund. What I really like about this fund is that it gives you exposure to a wide range of growth companies across different sectors of the Indian economy. So, if you're looking for a well-diversified growth fund with a solid track record, the Axis Growth Opportunities Fund is definitely worth considering. Alright, let's move on to number 4 on our list. And this one is a bit different. We're talking about the HDFC Small Cap Fund. Now, I know what you're thinking. Graham, small cap funds are risky. And you're not wrong. Small cap funds do tend to be more volatile than large cap or even mid cap funds. But here's the thing. With higher risk comes the potential for higher rewards. And if you're looking for a fund that has the potential to generate some serious alpha, small cap funds are where it's at. The HDFC Small Cap Fund invests in, you guessed it, small cap companies. These are companies with a market capitalization of less than 500 crores. Now, these companies are often overlooked by institutional investors, which creates an opportunity for individual investors like you and me to get in early on some potential multi-baggers. Over the past 3 years, the HDFC Small Cap Fund has delivered an impressive average return of 28%. That's right, 28%. And if you look back even further, the 5-year returns are even better, coming in at around 32%. This fund has consistently outperformed its benchmark and its peers. Now, I'm not going to sugarcoat it. Investing in small cap funds can be a roller coaster ride. You need to be prepared for some volatility. But if you have a long-term investment horizon and you're comfortable with a bit of risk, small cap funds can be a great way to boost your portfolio returns. The expense ratio for the HDFC Small Cap Fund is a bit higher than some of the other funds on this list, coming in at 1.10%. But again, with the kind of returns this fund has been generating, I'm not too concerned about that. Alright, rounding out our list at number 5, we have a classic choice, the SBI Blue Chip Fund. This one's for those of you who prefer to sleep soundly at night, knowing your investments are in solid, well-established companies. We're talking about the big players in the market, the ones with a proven track record of growth and stability. Think Reliance Industries, HDFC Bank, Infosys, those kinds of names. They may not offer the explosive growth potential of small cap companies, but they provide a level of security and consistency that's hard to beat. Now, don't mistake safe for boring. Over the past 3 years, this fund has delivered an average return of 18%. It might not sound as exciting as some of the other numbers we've thrown around, but remember, this consistency is key to building long-term wealth. The SBI Blue Chip Fund also boasts an impressive AUM of around 50,000 crores. That's a massive vote of confidence from investors. It shows that people trust this fund to weather market storms and deliver steady returns over time. And when it comes to expenses, this fund keeps it lean with an expense ratio of just 0.55%. That's incredibly low. It means more of your money is working for you, compounding over time to build that dream retirement nest egg. So, if you're looking for a reliable, low-cost way to invest in some of India's biggest and best companies, the SBI Blue Chip Fund is definitely worth considering. It's a classic for a reason. Alright guys, that wraps up our list of the top 5 mutual funds to watch in 2024. Remember, these are just a starting point. It's crucial to do your own research, consider your risk tolerance, and consult with a financial advisor before making any investment decisions. Now, for that 21,000 rupee reward I promised. It's simple. All you have to do is like this video, subscribe to the channel if you haven't already, and leave a comment below telling me which of these funds you're most interested in and why. I'll randomly select one lucky commenter to receive a special bonus resource package worth 21,000 rupees to help you on your investment journey. And as a bonus, if you take a screenshot of this video right now and share it on your WhatsApp status with the caption, "Investing in my future," you'll get access to 10 free financial calculators that I personally use to manage my own money. Just send me a DM on Instagram with a screenshot of your status and I'll send you the calculators right away. Thanks for watching everyone, and remember, the best investment you can make is in yourself.